We are investing about $18 billion into the semiconductor industry. What do you think India should do?
Looking at Semicon India, the scale at which we have organized it, the interest that we are seeing, I mean, you have to really pinch yourself because, 3 years back, we wouldn't have dreamt that something like this was possible.
If it's going to take decades even to get to our goals, are we going to fall behind in the AI race?
AI, in terms of its impact on the economy, comes in 3 steps. First is what I call invention, and then I call it innovation, and then there is diffusion. I mean, this is like stunning reform. GST is the second version. It's being seen as a consumption boost, but I don't think it's a consumption boost really. First and foremost, cars are not a luxury item. Small cars are 18%, which is a standard rate. Any branded FMCG is at 5%. Earlier it used to be 18%. I think this is a recognition that India has moved.
When it comes to, India's hope for producing a player like DeepSeek or Nvidia, where are we currently according to you?
These two lie on different spectrum, right? So DeepSeek is done by an algorithmic trader, brilliant innovation, but algorithmic innovation. Jensen Huang has built an Nvidia. He had the vision in 2002 to notice that some of the GPUs were being used for AI processing.
OpenAI's last round valuation was close to $500 billion. Now investors think that it can hit even $1 trillion, which is roughly, 25% of our economy size in that sense. Any advice to Indian youth how to think about career opportunities in this space broadly? Hello and welcome everyone to the India Opportunity Show. I'm your host Shrishti, and today I'm thrilled to welcome Mr. Neelkanth Mishra, who is one of the sharpest economic minds that our country has ever produced. He's the Managing Director and Head of Global Research at Access Capital and also the Chief Economist at Axis Bank. He's advised policymakers on literally everything, ranging from semiconductors to navigating trade wars. What I admire about him, that his insights are not just data-driven, but also brutally clear. He doesn't just talk about what's happening, but also helps us make sense of why it's happening. In this conversation, we talk about how India can thrive despite the global disruption, from Trump's tariffs to China's slowdown, from semiconductors to AI, and what it really takes to make India a 20 trillion economy. Hope you enjoy watching. Good morning, Neelkanth. Welcome to the India Opportunity Show. Thank you for being here today.
Thank you for having me.
I know you've had a very busy morning dealing with GST reforms as well as Semicon India, which is what brings you to Delhi. Let's start with Semicon India, because I think India is at a very interesting juncture where, we are investing about $18 billion into the semiconductor industry. If you were designing strategy for India, and some of you can take some insights from what you've seen in the conference as well. What do you think India should do to improve its game, and also how are we positioned today?
So I've been involved directly and indirectly for quite a while with this initiative. So I've been part of the advisory board of the India Semiconductor Mission for I think 4 years. I'm also part of the Techno-Financial Advisory Group, which sits on the fab projects and which approves we don't sit on it, on them, we try to approve them. So in a way, I've been involved with some of the decisions and the policies that have been implemented.
Right.
Looking at Semicon India this year, the scale at which we have organized it, the interest that we are seeing, I mean, you have to really pinch yourself because 3 years back, we wouldn't have dreamt that something like this would have even been possible. At the same time, at least the people within the team, when we meet, we only cry over each other's shoulders, thinking about all the missed opportunities. So we've come a long way. I think it's at least another 20 years before we can really say that we are where we want to be, and now the markets cannot take care of themselves. The approach that I would recommend going forward would be more directed. See, there are two ways to sell. One is to open a storefront, open a store, put a 40% discount, 50% discount on the storefront, and then wait for people to turn up. If they don't turn up, then you hire some people, or you yourself start going around on the street and say, what, can you see that discount? And people then start coming in. The second is to actually go to the people who matter, who are the most likely buyers of your product, and talk to them and say, what do you want?
Right.
And this is one of the reasons that the handset scheme has worked so well. The PLI scheme for handsets is one of the few that has actually been very successful. The reason was that the government of India identified that there are, two non-Chinese manufacturers, Apple and Samsung. Go and talk to them. What do you want? They ask for, of course, the moon. And then say, no, we are not getting that. And then you make it attractive for both sides, and you move much faster. So, so there are only about 15 or maybe 20 meaningful semiconductor manufacturers on the wafer fab side. Packaging, of course, again, it's a very concentrated industry, but there are many more firms doing packaging. On the wafer fab side, we have to figure out what is it that they want. And remember that the semiconductor capex was down last year, but this year is picking up again. So firms are again starting to look at expansion. Equipment companies, I met some at Semicon yesterday. They have a factory in Coimbatore. They're making 40 units a year, semiconductor capital equipment. They want to take it to 400. So this is what I find very important, that we identify the big manufacturers and we partner with them. We ask them, okay, what is it that you want? We'll get it done. It's not to say that we have not tried, but I think we need to try harder, because as important as it is to get some type of wafer fabs in, it is also important for the ecosystem to get built, so that the equipment companies start, setting up service centers here. There is the students start taking these courses in engineering colleges because they can find jobs here. For the ecosystem to build, you need 12 to 15 reasonably sized fabs that can last. Remember that this is also an industry which has very high degree of obsolescence. So it's brutally competitive. Semiconductors are among the most advanced things humans have made, but they trade like potato chips.
Yeah.
So you need to be really competitive. So yeah, it's going to be a tough journey. But I'm very happy with the progress we've made so far.
Right. And I also saw that your session at Semicon was focused on these international partnerships, right?
Yeah.
Can you give us some insights into what those partnerships could look like for India?
So see, this is such a complex technology that you can't learn it, or you can't learn it from start. It's like language. So when you see, the grandmothers talking to infants, and I doubt they understand anything. I used to wonder why they keep doing that, but that's how they learn language.
Yeah.
So it's these are complex things. You have to be at it. So you need someone to teach you this. So at least you can get started.
Right.
And so therefore, it's been a very important part of our approval process, that who is your technology partner, what's the quality, or what's the nature of your agreement with them. Are you overpaying, underpaying? Of course, their call, but are you getting the right type of technology? Are you getting the right type of support? And so long as you're backing the right entrepreneur, I think they'll get it. So see, I think the partners have an initial role on kickstarting. Like suppose, say PowerChip Semiconductor working with Tata Electronics. 40 nanometer node. Okay, it's like, it was the cutting edge node maybe 15 years back. But the at least on the 40 nanometer node, you can start to operate.
Yeah.
Now, to do that, you need massive libraries, you need configurations, there's so many things to get right, that you need someone who's done it, who's seen it, who's already operating a plant. It is still hard.
Yeah.
So in fact, Intel used to have this copy exact model that, just to make sure that yields in all plants were the same. They would make sure that all equipment, all configurations, all setup was exactly the same. So if it worked in one, it would get rolled out in all. So it is a very hard thing, but still, without a partner, you won't be able to work. So one is to get started. The second is to get supply chain, value chain linkages, meaning customers are, why would they see, this is a very fast-paced industry. There's very limited room for experimentation. So, so the value chain linkages, relationships, and then these are also things that we insist on, so that, will this help you get customer sign-ons? And so initially you get all of this. There are engineers and technicians being sent to their home sites for training. There's a lot of manpower, human resources development, but the the partners are very important for the future as well.
Yeah.
Because remember that this is the reason why it has been so remarkable, and it has had such a massive impact on our lives, is that it is relentless in terms of progress. So if you are not running, you'll get left behind.
Yeah.
So you need to keep doing R&D. You need to. So some of these partners that we have, I mean, they may not be the best partners that we would have aspired for, but we are grateful that they're willing to. I'm sure it makes commercial sense to them. But you need their support even to continue, because they have all survived 30, 40 years. So how do you keep doing that? How do you read the tea leaves? How do you see where the industry is headed? So there's a lot of partnerships that we'll need going forward as well. And lastly, this is a very collaborative industry, because as you can imagine, no one person can handle this level of innovation or can drive this level of innovation. So it is the collective force of, I would say, millions of engineers who first identify a common standard. So they'll say, oh, you know what, 2 nanometer is the next one. Okay, so, maybe 1 nanometer or 10 angstrom is the next one. I remember I used to be a semiconductor analyst when the 8-inch to 12-inch wafer transition was happening. So everyone has to get at it at the same time. So everyone from EDA, which is the electronic design automation, where the software that you use to design chips, to the wafer fabs, foundries, to equipment companies, the firms that handle deposition, that do the cleaning, the etching, the mask makers. You see the complexity of the supply chain is mind-boggling, and it is remarkable how seamlessly, I mean, from a distance, of course, engineers have to solve very hard problems, but how seamlessly they come together every 2 years and advance a node. So, so it's very collaborative. So I think, understanding how that process works, staying abreast with the industry, I think all of those things are going to be very important, even when we become very important, even when we become, and it's a question of when, it's not a question of if, because the progress we are making, the interest we are seeing, the manpower that we are seeing, it is remarkable how many Indian engineers are working in the most cutting edge fabs in the world, and how many of them want to come back to me.
Right.
So we have to just, so things will fall in place. I'm reasonably sure of that. But even when we become like the most cutting edge, so suppose we at one point are the most cutting edge nodes, even then you will need a lithography machine from, I'm assuming SML will keep driving the leadership, so you will need it from Netherlands. You will still need the wafers from Japan, because that 10-9 purity on silicon is something that very, very few firms have managed to achieve. So it is going to be a collaborative industry. It is not something that you can just say, you know what, now I am going to be doing all of it myself. So you need partnerships, and part of the reason that TSMC could do 3 nanometers and Intel couldn't was TSMC's partnership with ASML. Because at one point they had common parentage, Philips. Philips, as you know, had 20% stake in TSMC initially. And it was that relationship and the closeness of that relationship that allowed them to partner. These things take years to build.
Yeah.
So you will need, enterprising entrepreneurs in India who then are building strong relationships with research labs. It is mind-bogglingly complex industry. and hugely collaborative. So we will always need partners.
Right. Yeah, and you did also say that, some of the fab proposals that you were seeing were worse than the startup pitches.
Yeah.
What were some of the elements that shocked you, and how are we doing now? Have things improved?
Massively. They've improved massively. See, initially, I think the industry also didn't realize what this was all about. Most people would have scratched their heads. 50% capex subsidy from the center, another 20 to 30% from depending on which state you were setting up in, 70 to 80% subsidy. This looked like a cash distribution scheme. So all the wrong kinds of entrepreneurs whose only job used to be, oh, the government is giving money, let's take some, uh, would show up. In some cases, uh, uh, it wasn't clear they were not even presenting uh, who the ultimate beneficiaries were going to be or who the ultimate owners were. Where is the money coming from? No idea. So really, you really think that we are so dumb that oh no, this entity is clarity? Nothing. Where are you getting great technology from? Oh, we're talking to them. So can get us the agreement. And some of these early entrepreneurs were not even able to get those agreements because the world had seen that India had tried to do this in 2006 and 2016, and both times we had failed or we had not followed through, and therefore they weren't serious there that India is serious this time. So these guys were not able to find the partners as well. So it was very depressing that you're throwing money of this scale, 70 to 80% capex subsidy, effectively a plant given for free, and the decks would have no reasonable financial model. See, we don't expect detailed models at this stage where you have nothing more than a PPT. I mean, and I know that you cannot expect and you shouldn't expect a very detailed model. But having some broad sense of what is the IRR with subsidy, what is the IRR without subsidy? If IRR without subsidy is ridiculously low, how are you going to catch up? So initially, of course, the subsidy will help, but eventually you have to stand on your own.
Yeah.
We cannot keep
It has to become sustainable.
self-sustaining. Yeah. So no such discussion. And what I got really got me irritated was that when you're doing angel investing, this is angel investing.
Yeah.
Because there's nothing on the ground. There's one PowerPoint deck.
It's just an idea.
It's an idea. Yeah. And you're seeking hundreds of millions of dollars. And the least you can do is at least show me who the team is. Your team is not there. So then what are we investing in? So it was very frustrating. What I've been amazed by is as the commitment of the government has been understood, and I think it's a brilliant idea to create India Semiconductor Mission, because what happens is then there is one entity whose only job is to promote semiconductor. So they're not getting distracted that this is also happening there. We have to do semiconductor. So if you keep at it relentlessly, you talk to one firm, there were people in ISM who I think understood the org structure and organizational politics of global semiconductor firms better than people in those firms.
Right.
That if you have to get the CEO to attend this meeting, you have to go through these three people. So that level of knowledge was built. And remember that in early stages, when the government presentations used to come, I mean, it was very, very, very high level, like, wafers. It was memory wafers, there are logic wafers. They're very different. There's silicon, there's compound semi, they're very different. And now it looks very obvious. So now you see that the folks at ISM now know gas suppliers, know chemical suppliers, they know equipment suppliers. They are dealing with what kind of chips go. I was listening to a session yesterday where one of the senior bureaucrats was explaining how you have to work with the customs people and explain to them that, look, this chip is going here and not there, and therefore this is the rate that will apply. That knowledge is improved dramatically. And so what happens is, the level of maturity of the proposal when it comes to us is now far, far better than it used to be early on. Many of the basic questions that all of us would ask. So there were two members. So there are two committees. One is for wafer fabs, one for packaging. The packaging one had two members, and I was one of them. And the wafer fab had three members, and I was also one of them. I was looking at my job has been to look at the finance part and all that. So, so the technology experts and us, I mean, all the questions we would ask. So, hey, Indians are very smart, very capable. You just need the right exposure. So, the consultants and the agencies that have been hired to vet the proposals before they were brought to us, 1.5 years into the process, they started asking the questions that we used to. They saw us asking these questions. They said, yeah, these are right questions. Why didn't you ask them before? Now, you just have to say yes and no, because all the questions you wanted to ask, which are important at this early stages, have been asked.
Right.
So, even if, say, I'm not around, or no financial expert who understands semiconductors is around, I don't think there will be much lost, because the ISM already has a reasonable amount of expertise. So, I think we've come a long way. What has also happened is, as some of the fabs have hit the ground, and as we've seen, I think Tata Electronics did a great national service by committing to this body. It's going to be very, very hard work. It is already very hard work for them. But I think, the fact that they're in, and say Micron is in, or the CG Power guys are in, I think it's huge credibility booster for India as a manufacturer. And so now we are seeing a number of serious competitors, serious manufacturers, seriously talking about presence in India, looking at Indian partners. I am seeing Indian entrepreneurs raising money, and so, because, say, you still need to invest a couple of $100 million, you want to put up, say, $1 billion fab, and then seeking global technology partnerships. More importantly, all the Indian diaspora, which is massive in this sector, is on Sunday, awake that look, this seems to be really, really exciting. So, again, we need to solve so many problems. But I'll repeat that, it's unbelievable how much you've achieved in the last 3 years.
You said that, it's not a matter of if, but a matter of when. So realistically, what do you think the timeline is for us?
So this is a very long gestation industry. So to give you perspective, so in 98, 99 was when the first early Chinese fabs started to get set up. These were mostly princelings who had come from the US and were seeking Japanese collaboration. So there's Huahong, NEC. So NEC was a Japanese company, and Huahong was the local guy. There was Grace Semiconductor and all of that. I was part of the Credit Suisse First Boston team that worked on the IPO of SMIC, which is the largest Chinese fab. I was the first person to cover the stock. I've been to their 12-inch fab inauguration in Beijing. We still have the inventory they gave. They've been at it for 27 years now. Because the industry keeps running. And SMIC has needed repeated capital injections. It is much larger now. Of course, there are 7 nanometers, which is phenomenal. But they're still not at 3 nanometers. The Chinese still haven't got EDA, the electronic design automation. What we'll have to do is, because of so much of the disruption that is happening, like even the process of chip design that you have to place. Suppose, some of these transistors, some of these chips now have billion transistors. Now, you don't really have to place each of those billion transistors by hand, meaning on a computer, but it is reasonably complex, because there are 80 to 100 layers. Like, imagine flyover over flyover over flyover. So it's quite complicated. And that is why a normal chip today, because of all the libraries that have to be used and all that, can cost $200 to $400 million to design. this is a classic case of where AI will dramatically reduce the cost of design. AI can also, I think, help simplify the process of design, and so maybe you can actually build layers on top of, or build parallel paths to designing, so you don't, because the EDA side is also an oligopoly, and that is being currently used to stifle the Chinese by the US. So what I'm saying is we have to rely on some of these disruptions that are happening to make inroads. So we cannot really see, initially we have to do what others have done, which is we have to do 40 nanometers. And in 2028 we'll have to do 28 nanometers. So packaging, I think we are kind of getting there. Meaning mostly we are doing wire bonding, which is a 60-year-old technology right now. But um, this is what we insisted in the project plans, that look, it's okay to start with wire bonding, start with something, because it's 60 years old, but still a large part of the industry uses wire bond, so that will work. But you can't compete with the Chinese on this, and you can't keep doing this forever. So what are your plans to upgrade your technology? And so we forced the companies to think about that. Remember that they're also doing it for the first time, so they needed some handholding, some guidance. But what we are now seeing is the stuff that Micron is doing is really cutting edge. I mean, that HBM, that high bandwidth memory that goes into the AI servers, that connects to GPUs and all that. I mean, that packaging is happening in India. So packaging, I think we will get there. It's reasonably clear. From what I understand, 28 nanometers will get by, I think, 29, 30. I think I know what the deadline is. For us to sort of move forward and get stable yields on, say, 12 nanometer, 7 nanometer, it could be 2040. So these take time. See, the Arizona fab for TSMC took, I think, several quarters, maybe a couple of years more longer than to build than they had expected. Um, and the yields took longer to stabilize. Now they're getting very good yields. But it has taken quite a while for that to happen. But you know what? We're also discovering very interesting and very positive things. Like I heard that, so when you were approving these fabs, when you're doing the capex benchmarking. So earlier, I mean, some of these proposals would have no capex benchmarking, no cost benchmarking, which is because you forget about us asking. You need to have an idea of, because this is a capital intensive industry. If you're going to spend so much on capex versus what others are doing, you're not going to be able to make money. And I'm not kidding. I mean, there were clear examples where companies had bid with gold-plated projects. Classic old world, government ka paisa hai, take it. So, and even where the benchmarking was fine, there was some inflation that, look, there is no contractor in India who can say make good quality clean rooms. So the clean room, you see, equipment is anyway global. You get lithography from a couple of companies, etching from some company, whatever, right? So the point is, the clean room you have to build here. Now there are no contractors, or no one has experience of building those quality of class 10, class 100 kind of clean room. So the cost is inflated. That, look, in India, you know what? This company, it's class 10,000 clean room, but that makes the semiconductor capital equipment in Coimbatore. They said it is 1/5 the cost of a similar clean room in the US, in Arizona.
Wow.
And then I was talking to another semiconductor expert. Yeah, so why are you surprised? Because most of it is sort of pouring cement. Pouring cement in India is so much cheaper. Right. So, and then there's a HVAC. And so clean rooms are complicated, but not that complicated. So what I'm saying is, we're discovering that it's actually going to be a lot cheaper to manufacture here.
Right.
So that's why that equipment company has 40 units a year. So that was their first plant, and now they're saying, well, we want to go to 400. So I think there should be scope for positive surprise also. And when I see the quality of entrepreneurs who are going after these problems, the ones that we have approved, is quite remarkable. See, and how they're approaching the problem. See, and this is where we need to back the right people. We'll have made mistakes. Some of them will fail. We'll raise questions on that, but we'll see. But I will not name them. I don't think it's fair. But but there are some people who are approaching the problem in such a novel way, and stitching relationships in such a novel way. It is remarkable that I'm quite sure that the process may be faster than what I just laid out to you. It is. I'm hoping that it can be faster because we are seeing some positive surprises as well. But yeah, it's a long journey. See, if anyone thinks that PLI scheme you launched today, 5 years later, you're shipping $25 billion of iPhones to the US, it's not going to be that simple.
Right. Here I want to ask you about a question. Here I want to ask you a question around global competitiveness, right? Because if it's going to take decades even to get to our goals, are we going to fall behind in the AI race, as everyone is calling it? In terms of geopolitically,
Yeah,
things are moving so fast. There's such rapid innovation. Are we a little late to the game?
you're definitely late to the game. We are many years behind. Remember that this race is only about 12 years old. I mean, in a real sense. Of course, my BTech project in '97 was uh, generation of animation using natural language,
Right.
right? And my friend was doing the graphics side. I was doing the natural language processing side. Uh, in that process, I remember we did a course AI 786, which is artificial intelligence. So AI has been around for a long time. Jeff Hinton, has been at it for decades. Um, so effectively 2013, 14, right? So we are about 10 years. Last 2 years at least, we've woken up and we're trying to do something. But the challenge I see here is that this is something that the industry needs to solve, not the government. See, in no country is the government doing anything about it, other than providing, you know, what you call common goods, public goods, that say data lakes, they can be made available for training, um, or some initial stage funding support. But I mean, China does a lot of that, but their industrial policy is way more active than ours, and their political system is so different. I don't think we can replicate that. So what I would say is that I think we have now enough people who have woken up. There are enough young engineers who are starting to get going. Uh, and remember that AI is also, in terms of its impact on the economy, it comes in 3 steps. So the first is what I call invention, then I call it innovation, and then there is diffusion, which is that see, invention is what you are mentioning is giant data centers, 10,000 GPUs, massive capex, nuclear power plant to support it with electricity, um, and huge algos, so massive training costs and all that. That race we're not even part of. Okay. So now there also you will see that the Chinese and the Americans, the Chinese have filed more AI patents than the Americans, by the way, on this.
Yeah.
So the Chinese and Americans are very approaching it very differently. Now, it could be because the compute access in China is constrained, but everyone in America seems to be going after AGI and keep building on this. Whereas in China, it is mostly about how do I apply AI, and so a lot of it is open source.
Yeah.
It's a lot of sharing happening so that the ecosystem builds, and I think that is very good for us because you see if it is open source accessible, so we can start building on top of that. And one of the things, like when say Satya Nadella says, I think he said now 6 months, 1 year back, that I don't want to invest in data centers because there's so much investment happening in data centers. I would rather lease than build. Now, it is quite possible that the cost of a token uh, can fall 80% from here.
Yeah.
And then the differentiator becomes what I call innovation, which is not the artificial intelligence engines sophistication and efficiency and all of that, but more of what business use case are you building around. There, I think we have decent number of firms which are starting off. I mean, again, some distance to cover, but it's not as depressing as it is on the invention side. So we have the core large language models and foundational models. So, but I think the biggest economic impact will happen when it comes to diffusion, because when people say where is the impact of AI on the economy, they said look at any economy. Like, let's start with India because that's something I understand a bit better. Uh, 40% of our workforce is in agriculture. How is their lives getting? How are their lives getting changed? And maybe smarter YouTube recommendation, right?
Some insights on how to grow better.
Yeah, but
Things like that.
yeah, but in that too, I doubt that if you're doing paddy with protective prices, it's really going to be helping them much. The if you're looking at the construction industry, if you're looking at cement making, if you're looking at steel manufacturing, if you're looking at chemicals manufacturing, mining. So, see, everywhere, someone or the other is experimenting. So, you can have driverless trucks in mines, which are unsafe and therefore more than to move around. You can have, when I know real estate companies are using AI to design real estate.
Yeah.
Because, see, most of the things are actually common. Right? I mean, so much of space has to go to toilet. The toilet should be at least having one window outside, or at least the fresh air that can go, or whatever, right? So those standard rules, and then they design very quickly. Why do you need to have designer design, the thing with hand? So, so some places it's happening, but it's a very small part of the overall workflow. So, it is only when AI starts to affect. So currently it is affecting the only place where a lot of structured data is available and where the language is also man-made, which is programming, where you can do away with many programmers. I am not, even on that I'm not very pessimistic because frankly, because the cost of software will come down so much that I think the usage will go up many times more. I mean, you'll be amazed when you think about how many times you don't try to make a software because it's so expensive and it's going to take time. If I was to tell you that, no, it'll take, say, 30,000 rupees and one month of work or 1 week of work, you say, yeah, why not try it? Like, if I'm, say, writing a report on ONDC and I want the whole team to, in Access to write, say, accompanying pieces, and then 3 months later, someone else writes it, and you also want to share monthly transaction volumes on an updated basis. I can create an ONDC macro site on my Access Capital website, right? As of now, I don't even dream about it because, then there will be a court and then there will be negotiation.
Well, then now that's become doable. There are lots of AI tools which have emerged where you can create these websites.
No, I don't know. So what I'm saying is that that's an example of things that you can do. And as someone explained that, look, today, in all of India, there are only about 5.5 million people who know how to get the computer to do what you want it to do, which is a programmer's way. Imagine if with voice and AI generated code, everyone could do, could instruct the computer to do exactly what they wanted to do. This is remarkable boost to productivity. So I think it'll take us time to get there. But when it comes to diffusion, and this is where, like in Aadhaar now, what we are doing is take everything digital. Because see, it is embarrassing, frankly. I mean, as Aadhaar chairman, I keep telling the team, it's embarrassing that, you go to the airport, you're showing, now there's Digiyatra, of course, but with most people, will show the boarding pass on the phone, and then they'll take out their PVC card and show it. I said, well, this is a digital ID.
Yes.
And there's so much fraud that happens. People check in with the wrong name. There's so much of, like, you're checking into a hotel or they're taking screenshots. Sometimes they're taking the screenshot on their personal phone. 2 days later, they move to a different hotel. Data privacy gone. So why don't we use digital processes, and we can protect privacy. We can keep the data safe. So as we keep building the digital public infrastructure, making it more and more accessible. So what we have seen now is, like, out of the 9 crore authentications that we do in Aadhaar every day now, 1.5 crore is face auth. And it is growing very fast. And once the Aadhaar app, we are revamping it. Once the Aadhaar app is fully launched, I think my expectation is that face auth will just really take off.
Right.
And there are ways and ways of actually improving on face auth also, making it even more secure and tamper proof. So so as we keep investing in that, I think our ability to push through innovations which are AI enabled safely to a very large number of people is uncomparable. So there, I think we need to I tend to self-flagellate a lot. As Indians, we do a lot of that, but we also have to be aware of the strengths we have.
Yeah.
No other place has this type of infrastructure. Like, the fact that we have and we have tried and tested. We have the confidence that that we have built UPI, which does 20 billion transactions a month. So I could be wrong on that number, but because it's growing so fast, I always lose track. But point is that we have built something like that, and so we can, of course, ONDC and OCEN, which is the Open Credit Enablement Network. Both of them need a lot of work, but I mean, there is policy support. There is a desire to get things moving. So we should be able to, and so therefore, so those are channels through which. So, for example, as you would be aware, in financial inclusion, we were, when the Jan Dhan Yojana was launched, that is, everyone got a bank account, we were 40 years plus ahead of where our per capita income suggested we would be.
Right.
And that is productivity, right? That is how you leapfrog and you grow faster. So I think that on the diffusion side, we can do far better than other countries. That's a strength. But we definitely need to get the innovation side much stronger. In some ways, the invention, or at least the actual token, the cost of token, etc., we are kind of like praying, like we do for oil, that hope oil prices don't go up, they keep falling. And in real terms, they have been falling, right? I mean, oil, if you remember, was 150 in 2007, and 120 in 2012-13, and today it is at 70. Imagine where our inflation is, where our GDP is. So, as a percentage of GDP, the price of energy has actually come down, which is all great, but it's not because of us. So we keep praying. Last point on that first leg, which is I think a very dangerous vulnerability. That is part of the reason that it is very important to invest in fabs. So I'll be very honest and upfront, because I had been a foundries analyst, and when this was being contemplated, I told the minister, that in history, in the last 30 years, only 2 companies have covered cost of capital through a cycle. It used to be 3, now it's 2. So it is Intel, TSMC, Samsung, and Intel is now gone.
Yeah.
So it's a very viciously cyclical industry.
Yeah.
So there will be bad years and there'll be good years, but through a cycle, you should be able to at least cover your cost of capital. Very few companies on the manufacturing side have done that. So my point was, is this the best use of capital? And I think the ministers were right, the prime minister was right, that this is required for strategic autonomy. That you cannot not be in the industry. And so the objective is not to build the fabs. I think most people still scratch their heads as to, and in fact, if you look at the temptation that now Trump has had, that, oh, we're giving this CHIPS Act funding to companies, we're not even getting stakes in return. That's a bad idea.
Yeah.
So, so it's remarkable that the government is just giving this money and saying, you know what, we need this plan to succeed. We don't want any staking. So, and realizing its own limitations. So I think that the objective is that at some point of time, hopefully sooner than later, we will be able to at least get by. So what you must have seen, like DeepSeek's most recent update, the most remarkable thing was that the model runs on Chinese GPUs.
Yeah.
I mean, it's behind the curve, 7 nanometer, whatever. Right? But point is that they're so, and it is then that you see the innovations happen when there are constraints. So it's it's going to be a hard grind, but fun, and I wouldn't be too disappointed.
Absolutely, because as an investor in the private space, I often see these pitch decks, right? And I think the conversations that most VC funds are having these days is that where is the value capture actually going to lie? Is it going to be on the LLM side, infra, or consumer applications? Which I think you've put beautifully in this framework of innovation and diffusion. But when it comes to India's hope for producing a player like DeepSeek or Nvidia, where are we currently, as according to you?
Okay, so these two lie on different spectrum, right? So DeepSeek is, of course, an algorithmic trader, done by an algorithmic trader who had money and who had brilliant innovation, but algorithmic innovation. What Jensen Huang has built in Nvidia is, over 32 years, 93 when we started. So built first a graphics processor, and he had the vision in 2002 to notice that that some of his GPUs were being used for AI processing.
Yes, because originally it was for gaming.
Yeah,
specifically.
So and yeah. So and then he started investing in CUDA, and that depressed his margins. He kept investing. So that's a very different beast. I mean, but as you can imagine, for Indian firm to start today, get to Nvidia scale will be 20 years, 25. Something can happen faster. There are large Chinese design firms which have scaled up in 15 years. So, but I don't think anything less than that is reasonable to expect. DeepSeek type of work, I think there are enough Indians in the world who can, with the right incentives and then the right infrastructure, can start to solve some of those problems, or those type of problems, or build on it, because DeepSeek is open source. So there I'm, I wouldn't put it at 15 years. It is 5-7 years. I don't know. I mean, I have not given much thought to it, but there the possibility of catching up is much better than having a firm like Nvidia come out of India. The age-old problem which we grapple with in ISM, but maybe the general public is not aware of, is that we have 20% of the world chip design engineers, but we have no reasonably sized chip design companies. So all of the chip design that happens in India happens for global firms. Every single large global firm has massive operations in India. So Indian designers now, see, initially it was all low-end work. So I remember Intel's graphics chipset. So it had tried to compete with Nvidia, and ETI was their competitor at that time. So they would embed a chipset, graphics chipset, to reduce the cost, and And so then they kind of pushed Nvidia and ATI into the more the gamer territory. Conventional motherboards, you didn't need chips. Anyway, so that was pretty low end, and so that used to happen. Now, some of the most cutting edge work actually happens in India. There are 30,000 engineers Intel has in India. In fact, a friend of mine who works in Intel was saying that the scale is now large enough that Intel can actually contemplate a fab in India as well. Though, of course, they're going through their own challenges right now, so I doubt that that is happening tomorrow. But what I'm saying is that we have enough talent, but no Indian design companies. Why? And how do we correct it? I think the biggest reason why we haven't seen this is that we didn't have any access to product life cycles. See, if you start designing a chip today, it's like writing software code, right? It will take you 1 year, which are doing a reasonably complex chip, and which is what we should try to do. It will take 1.5, 2 years to do it, right? And that's when, and maybe 1 year into it, some of the test chips and some fabrication, some basic product functionality, all of that, you can have to start demonstrating to the OEM or the device maker who wants to use your chip. And so that's when you get designed in. And then you scale up. So it's a 3-year kind of cycle. Now, if you start making the chip for what is already in the market today, who's going to take it?
Yeah.
And even if they take it, how much money will they pay for it? Right? Because they already have people who are. So unless you get visibility of the value chain or of the product cycle, say 3 years later, it's very hard to design your own company. Now, it's quite possible that, say, some people in global firms who are working in India would have taken that expertise, sought venture capital, and created firms. So this in the last 2 years has started to happen. So now there are some specialized VCs who have emerged. See, the problem also is that how do you get venture capital? The VC needs to understand the space.
Yeah.
So will this chip work? Who is it up against? Which other firm is trying to do the same thing? So I think that expertise, so that ecosystem development again has started, but so the government also had a design-linked incentive scheme. We have also, because one of the most expensive parts of designing is the EDA licenses, the software used to design the chips, electronic design automation. So the government actually, talked to some of the major EDA firms and got subsidized licenses, or that we'll pay for it and we'll make it accessible. So the minister was talking about how the 1.2 crore person hours have been spent on those tools. So there is some work happening. So, and remember that there is also quite a bit of downstream assembly now starting to happen. So clearly now you will see the firms sharing details of their next product. So not the one getting launched this year, but say they're getting launched 2 years, 3 years later, when they start planning for it. And as that knowledge becomes slightly more commonplace, then it will be easier, because you need to have it on a systematic basis. It cannot be offhand. So and therefore it makes sense to get the downstream ecosystem in here. So we have the downstream ecosystem in a reasonable way now. Again, some distance to travel. I think laptops, PCs, servers, I think we need to do some more work. But we are moving in the right direction. And that should also help this process. But Nvidia replica is, there's only one Nvidia in the world only. But what I'm saying is, even a $200 billion company or a $100 billion company or a $50 billion company, I think could be 10, 15 years.
Right. And this is very interesting because OpenAI's last round valuation was close to $500 billion. And, now investors think that it can hit even $1 trillion. which is roughly, 25% of our economy size in that sense. How do you think? And, that's why I think, they're looking at India so closely, opening an India office as well as, launching a product specifically for Indians. I think because the application and the diffusion part that you were talking about, that can be very well implemented even by global players, right?
Yeah.
So how do you think about, specifically when it comes to Indian youth, who are thinking about, whether to stay here or go and work for these companies? Because India has exported a lot of its talent, right? And we've seen so much brain drain happen. Any advice to Indian youth how to think about career opportunities in this space broadly?
Yeah, the first thing is that anyway, the US is no longer as welcoming a place for outsiders, forget
Yeah.
just Indians. See, we tend to get particularly offended that Trump is behaving the way he is. But he's an equal opportunity offender. So he's offending everyone.
Yeah.
So we shouldn't take it personally. We should take it personally.
Because I think the largest export was from India and China in terms of talent, right?
Yeah, no, no. So personnel wise, and see, remember that now we have very good quality universities coming up. I can see because I graduated from IIT Kanpur. I have at least some perspective on the stuff that the director Dr. Manish Agarwal is doing in terms of setting up units for translational research, much stronger industry collaboration. We are making some deep inroads into. See, again, it's a learning curve. I think all of this is muscle that never existed. It has to be built. Meaning, if you have to get an R&D project from an industry, first the industry itself doesn't know that IIT Kanpur can do it, and IIT Kanpur doesn't know that that industry needs it. Maybe both cases are true, but how do you blend it, right? How do you match it? So we are starting to solve some of those problems, or at least trying to solve some of those problems. But in 5-7 years, I'm not sure it will be that big a difference. See, remember, just to give you perspective, see, in my batch of computer science, we graduated in 97. I may be the only person, yeah, I may be the only person who never went abroad to work. I was in Singapore, Taiwan, but that was more in the financial services sector. I was not doing computer programming.
In a class size of?
24, it was a very small
Yeah.
size at that time. But and some of them came back and they set up very flourishing businesses. And they've been great startup entrepreneurs, and they're doing great work. Today, almost no one goes.
Mm.
So many of them went abroad. I mean, my batch, because at that time, going abroad for studies was very important. And then people found jobs, and many of them became US citizens. But today, I think the default option is to stay in India. So some of these things are actually starting to change already. And this is not because the US is becoming hospitable. It is just that India offers good opportunities. See, think about it this way. Uh, you know, 30 years back, the air quality, water quality set aside, the quality of housing you had, the quality of cars you could drive, quality of food you could get, there was such a dramatic difference between what you could get in the US and what you got in India. Today, everything is caught up. You see some other apartment complexes that are coming up around where the San and Dholera, belt where these plants are coming out. And the quality of construction, the houses, it's very, I'm not saying there are golf courses, maybe there are, I've not seen any, but what I'm saying is that there is less of a disadvantage in terms of quality of life. But there are, I think, and plus, I think the risk appetite is much bigger. So, the youngsters are much more willing, and this is again, I would say, um, this is not necessarily just that the youngsters are somehow braver. It is just that they have a certain cushion on which they can build. See, in the 90s, we had just come out of the license Raj. The mindset of parents was very conservative. When I tried doing a startup in 2000, quit my job in Hindustan Lever, my my uncles and my parents never said anything, but they've always supported. You decide what you want to do. But my uncles and aunts were on HL ka job chhod diya. But today, when being a startup entrepreneur is actually a badge of honor. So, so I think the behavior has changed. So I won't be too pessimistic. See, remember that we are still a $3,000 per capita economy. No, it is, and the US is an $85,000 per capita economy. So the amount of risk capital they can afford. See, because generally wealth is about 4 to 5 times income for a country. So if you just do that, India would have, give or take, $15 trillion of wealth. The US would have $130 trillion of wealth, $150 trillion of wealth. If you have that much of wealth, if you just take a slice of, say, 10%, see, remember that beyond a certain wealth, the risk appetite also goes up. So if India would be applying, putting, say, 2% into risky assets, they would be putting 10% into risky, 20%. So the risk capital is much bigger. So that is, but as we were discussing earlier, the data is all here. OpenAI doesn't want to come here to sort of get diffusion scale. They want our data. So, because the more the users, the better it gets trained. So it makes sense to, you look at the charter, that AI charter that was US, bipartisan group has created. They're talking about how, it's important to get global data freely. And I think India, thankfully, has caught on to that game. But yeah, so we have the data. We have to find ways to use it. See, I don't want to make it sound very rosy. There's huge number of challenges and problems to solve. But I would at no point be very pessimistic about our prospect.
As someone who has very good insight into digital public infrastructure and Aadhaar, and obviously, these and UPI as well, because these are some of the best products that India has been able to build, and as well as export, right? What opportunities do you see in that space specifically when it comes to data and digital public infrastructure?
So, what it does is it I think forces innovation. So the way to think about it is that in many parts of the world, payments is how you make money. What DPI does is in India makes payment free. They're charging, I think, 2 rupees.
Yeah, now they want to start charging.
Yeah, but it's a very small amount. So you can't make money on that. So now you have to innovate. You have to build solutions on top of it. So as the DPI layers keep getting built, so you start with Aadhaar and Jan Dhan and mobile, and then you have bank accounts, and then you have payments. Now, payments is a solved problem. So anyone can pay anyone at any time, no friction. Can we now do business transactions? Can we now do credit transactions? And how seamlessly can we do credit transactions? So OCEN, which is the Open Credit Enablement Network, which is what is also called the account aggregator model, it protects data privacy, but allows individuals to use their own data or to help monetize their own data to get cheaper credit. That's the broad objective. And so in the last couple of months, we've seen remarkable progress, but I think it has some distance to travel. But there's so many problems that can be solved there. One of the fastest growing areas of credit for banks is MSMEs. And a large part of that market has been opened up by GST transactions. So, and now with this remarkable simplification, I mean, this is like stunning reform, this GST, the second version. It's being seen as a consumption boost, but I don't think it's a consumption boost really. It is, I mean, it is a consumption boost in the near term, but first and foremost, it is a realization that India has changed. So cars are not a luxury item. So small cars are 18%, which is a standard rate. See, 75% of GST collections will be at that rate. So it's a standard rate. FMCG, any branded FMCG is at 5%. Earlier it used to be 18%. as if, wanting to consume a brand is a luxury. So I think this is a recognition that India has moved, and that's quite remarkable. It is significant simplification. So what this will do is push even stronger formalization, because all the high rates are gone, and therefore more transactions come into the system, and then that data then becomes available for many types of business problems to get solved. So one of the firms was telling us yesterday at this get together at Semicon that, oh, my supply chain partners are not getting financing. And I was really scratching my head and said, look, every bank I know is really hunting for opportunity. They know that so much money is being pumped in by the government in semiconductors that there is going to be a desire and an opportunity to finance and get involved. So there's clearly a matching problem. And so there are many of those, I think, problems that still need to be solved. See, India's debt to GDP is 56%. There is going to be greater formalization. I think we'll get to 100% maybe 15 years or so. And so these are areas where really hard problems need to be solved. New layers, I think, can be built. New types of systems and solutions can be built. So similar frameworks can be used to share intellectual property, educational content, provide healthcare access. So there are many things that can be built on top of the layers that exist. And at least our objective, and the Aadhaar that we can control, Aadhaar only provides identity, and I don't think we should try to do more, is to make it much more convenient on a digital basis. That if we can get the installed base to say 20 crores, I mean, of course, we have about 140 crore Aadhaar numbers now issued, but imagine the number of the safe authentication that you can do on your phone, and you can do app to app. And so the trust on who is logging on and who's not, and the reduction in the rates of fraud will be phenomenal.
Yes.
So we can build many more apps and solutions on top of it.
Yes, and also when it comes to investing in the right opportunities, when it comes to backing the right founders in the space, where are you seeing some of the biggest opportunities? Because cost of capital has dramatically come down anyway, and now it's become easier for businesses to access capital in a big way, which used to be a very big problem for Indian entrepreneurs. What do you see that unlocking? And with this now GST simplification, how do things change from here?
Oh, awesome. So so the cost of debt capital, the cost of equity capital, I would even say different forms of capital. So even in private equity, there is like a form called buyout capital, meaning that these are firms that specialize in just, they say there is an inheritance problem in some firms, so they just buy out the whole company in professional management and grow it. It's a very different type of firm, and those are also capital forms that are available in India. So there are many. So capital-wise, and with the government showing remarkable fiscal discipline, and the cost of capital, interest rates are all down. I think on the regulation side, a lot more needs to be done. So so there are still tens of thousands of potential violations which have criminal punishment, meaning that you can be put in jail. There are tens of thousands of filings potentially that you need to be exposed to. I mean, you don't have to make those many, but so how can that be simplified? So I think those are things that the government is working on, and then the entrepreneurship and the entrepreneurial spirit. So the question you ask is, where will the opportunities come? See, the first is that I think branded products. I'm not just saying this is what happened in China, so it'll happen here. I'm just saying that think about what happens when someone's income goes up meaningfully in 10 years. You see, mostly food habits don't change. If someone was going from very steep poverty, maybe they start eating a bit better, but can be very roti dal sabji. So I don't think you can starting quinoa and all of that. But the point is, how much can you spend on that? The number of clothes, well, some people can spend a lot on clothes, but there's also a limit to that. Mostly what people then do is travel, buy a bigger house, and start sort of investing in their own myths. So, for example, you will see that people will say, you know what, I only like this brand of coffee, double filtered or whatever, and I don't even know. There are people who are like big aficionados. I have never been able, maybe there is a difference. I have never been able to figure it out, but that's what affordability does. So I think branded consumer goods, because then people can afford to invest in those things. Like, if you just have to get pack of soap, you don't care where it is, Lil or Nirma or whatever, right? You just want a pack of soap. But if you can afford it, you say, no, that one.
Now about eco-friendly, organic, those kind of things.
So I think that, so I think branded products is going to be a big opportunity. I think housing related investments, meaning, see, the average Indian, give or take, lives in 130 square feet of constructed space. In 2019, it was 100 square feet. I'm assuming it's gone a bit now. An average Chinese in a tier 3 town lives in 550 square feet of constructed space. An average American lives in 700 square feet of constructed space. And the quality of that space is also better. So there are tiles, there's glass, there's aluminum, better cabling, wiring, fan, infrastructure, AC. 85% of 85 to 90% of rural houses in China have refrigerators and washing machines. So, so all of these are definitely going to be strong areas of growth in the next 15, 20 years. But then there are the disruptive spaces as well. As I was saying, I think chip design is ripe for disruption. Anything that has this kind of fixed costs and barriers to entry can very quickly get disrupted if you can find ways to design chips using AI and trying, testing, and iterating. It's not going to be easy, but that's why if you're a startup entrepreneur, you need to solve the problem. Same with drugs. You would expect that, which is why I read this post recently where there are no trillion-dollar biotech companies, but there are startups being financed at valuations of 100 billion, 80 billion.
The seed rounds are like now 100 billion, 200 billion.
Yeah. Because using AI, you can dramatically reduce the time needed. And so basically, see, the reason why it cost $1 billion, when I used to be a pharma analyst, $1 billion, I'm sure you know now. But that was risk adjusted. So it was not that I think phase 1 trial at that time used to cost some $30 million. Phase 2 would be about 50, 60, and phase 3 would be 150, $200 million or so. But so many products failed in phase 1 and phase 2, and 50% failed in phase 3, that the risk adjusted became $1 billion. Now, assume that you reduce the risk of failure substantially using AI and testing it out well before you launch it or you get into clinical trials. Your risk adjusted cost can be 300 million. And then suddenly, Indian companies are in play. You see, no one has the balance sheet to invest in So the Glenn Sadhana has been doing it. Some other firm, like I think Sun Pharma, Dilip Bhai has been doing it as well. But Dr. Reddy also was one of the pioneers in this, but have not done enough. But this is again an area where I think a remarkable level of innovation. I think chemical substances, very advanced forms of chemistry. So as you go about all the problems where there's significant iteration, and which is where AI can actually do the problem for you, or you don't have to spend your own brain cells on that. I think this becomes you can start identifying all the areas where opportunity.
Great. Yeah, I think those are some fantastic ideas that you shared with the audience. But I would also, just the last part, I wanted to cover the geopolitical stuff which is going on, right? Like India's response so far has been rather pragmatic. One can say, we haven't responded very aggressively to Trump's tariffs, and there's also geopolitical tensions around the world, like, our relationship with China. The PM is making very significant gestures in the sense of enabling world trade and global trade, but the borders seem to be closing down on growing economies, right? So, what can India do better to cement its positioning as a next emerging leader? Because there is a definite shift in world order. How do you see this evolving for India?
So the first is that uh, no country over a period of time of this size, of the subcontinental size like we have, is that dependent on external demand for growth. See, you can grow a Korea or a Taiwan or a Thailand. Uh, the moment you get a firm like a country like China to start depending on external trade to boost its internal demand, then you see the kind of disruption that is happening.
Yeah.
If it wasn't for China, the world trade would not be getting disrupted the way it is. We'll get to world trade, but just to give you an example of the shape of things to come. So, if today we are give or take a $4 trillion economy, and assume at some point we are a $20 trillion economy, so we would have added $16 trillion of GDP. GDP is annual income, so
Yeah.
$16 trillion. I'm very sure that not more than 1 trillion will come from a change in net exports. So in all of last year, China, which is one of the biggest manufacturers on a relative basis the world has ever seen, comparable to US at its peak, has had a good straight surplus of $1 trillion in a $19 trillion economy. So, I remember having done a survey in 2018. I was at Credit Suisse, and we had asked our global colleagues to help complete a survey. So they talked to all the big firms which had manufacturing capacities in China. Combined revenue was $1 trillion, so reasonably large setup. And so nearly 3/4 of them said that we manufacture in China for Chinese demand. So if there's no point of China plus one and all that. So, so China plus one still is a theme, and I think it's an important theme. But what I'm saying is that as we think about our own growth, we have to see how do we unlock our domestic demand. And much of that is going to come from, as I said, real estate. Like, how do we get cheap, affordable housing to people, and at the construction of that will create demand, steel, cement, manufactured goods. So there's a lot that can happen. But at the same time, I think global trade remaining open is very important. Did you know? And we have a global trade tracker that even till July, which is the last data we have, global trade was still growing.
Oh, okay.
So, so what happens is that economic forces are way bigger than the powers of governments. So people say that the only thing governments fear are the bond markets, but and there's some truth in that. But like the British are now figuring out their bond yields are spiking. But I think if the state has imposed artificial restrictions and is unable to enforce them, so for example, and so if you take China and Hong Kong and the US, and look at so US says we imported X from China and Hong Kong, and combining them, and China and Hong Kong say we exported Y to the US. So normally X and Y should be the same, but till 2017, X was about $45 billion higher than Y, and it was because I think in this, I'm dug deeper, but mostly imports are including insurance and freight, so that being higher, you understand. After the first Trump tariffs, this became 114. So now X is $114 billion less than Y.
Because of under invoicing?
Yes. And transshipment.
Interesting.
So, see, remember that, there are customs departments like India's, which are, because of the revenue pressure they've had over decades, I mean, they have a massive amount of expertise in sniffing out fraud and evasion. But, sorry, the US, I have to close the- so, but the US has, till last year, this has not been part of their remit. So, so you can, so they don't scrutinize the documents the way they are. They should. I don't think it's very clear how the transshipment formulas that they're applying. See, that team is sitting in the center and sort of discussing with each other and scratching each other's backs and feeling very happy about it. Oh, Thailand, we will assume 30% is transshipped to from China. For Vietnam, we will assume 30% is. I said, what? I mean, which product? So you have to specify. So I don't think there's any clarity. Plus, the US is only one part of the trade. So remember that India. So the global goods trade, global goods exports are about $25 trillion, right? 25 something trillion dollars. The US imports 3.3 trillion, but I think it exports about 2 trillion. So, US is 8% of that 25 trillion. The rest of the world is still trading.
Yeah.
There is still CPTPP, there is still RCEP. Of course, I mean, if the Chinese start dumping elsewhere because they can't enter China, then other barriers will start coming up and they'll have to start behaving better. But so we need to be cautious about over dependence on external demand. But I don't think we are, other than in services, which frankly are very hard to stop. But on the good side, I don't see that big a disruption from the Indian perspective. See, whatever problems we have to solve are all internal problems. I think if we can get that right, and see this 50 and 25, I don't think 25 or whatever that rate it settles to, is it 20 or 15, because the Commerce Minister has said that by 4th November we'll have a deal and all that. So the point is whether it settles at 15 or 20, we'll see. But that's not going to fall below that, because once any government gets used to a certain stream of revenue, they've already figured out a way to spend it, and therefore it's very hard to wind down.
Yeah.
So that's not going away. But as I was saying, there will be opportunities for transshipment, and a large part of it, I think, will be borne by the US consumer itself, right? Because you look at, say, in apparel, Indian apparel manufacturers have margins of 5 to 7%. The Chinese have 2 to 3%. Vietnamese are somewhere similar. Where is the margin for 15-20% kind of? So most of it will get passed through to them. About 60% of US goods imports are also intermediate goods and capital goods. In which case, the transmission to the consumer will take several months. So for a few months, they will celebrate that, oh, see, there's no CPI impact. But I think it is inevitable it will happen.
Yeah. Wow. Neelkanth, this was so fantastic to host you today because, I always say that the audience gets a front row seat to all the action happening. And I think, you have the ringside view of what's happening with the Semiconductor Mission, even with the GST reforms. And what a great way to think about India's growth, right? And I call this show the India Opportunity because truly we are tapping into this opportunity and you're a true torchbearer at that. So thank you for being here despite your sickness and making time for this. I wish you well. And look forward to seeing what else you do.
Thank you, Shrishti.
It's not every day that you get to sit across from your icon and ask them all the questions that you wanted answers to. And that was the day for me today. If you enjoyed watching this episode, Please remember to subscribe to our channel so that you get notifications every time we drop another one.